I think this next phase, so the next bull market or the next business cycle, will see a mass onboarding of institutions. It's almost impossible for retail investors to continue the pace of adoption. It needs the institutional capital as well, which drives out the ongoing adoption curve. So, my view is still by the end of this cycle, the space is probably 10 trillion plus. And that happens because of the institutions come into the space, offer more products to their clients. So institutions coming into the space tends to mean that BlackRock offers a product to their network of advisors. So it allows more money to come into the space via different mechanisms.
Real Vision founder and CEO Raoul envisions that we are approaching the next explosive phase of the crypto bull market. In a recent interview on the Binance YouTube channel, Pal highlighted his belief that this upcoming cycle will differ from previous ones, driven primarily by institutional investors such as pension funds, family offices, and other significant financial players. He predicts that their participation will elevate cryptocurrencies to a $10 trillion asset class. Pal emphasized that the cryptocurrency market is fundamentally distinct from traditional markets like stocks, bonds, and commodities. The crypto industry's notable volatility stems from its early growth stage compared to more established asset classes. Nevertheless, institutional investors are now embracing this volatility, recognizing assets like Bitcoin and Ethereum as valuable portfolio diversifiers, capable of mitigating overall portfolio risk and offering substantial upside potential. Despite potential obstacles such as regulatory clarity and liquidity concerns in the cryptocurrency market, Pal asserted that institutional investors are increasingly entering the crypto space to safeguard their wealth against fiat currency devaluation. He believes this shift will significantly impact the industry. Here are some key highlights from the interview, where Pal discusses macroeconomic shifts influencing institutional trading strategies and the potential implications of increased institutional adoption on crypto asset prices.
Well, in terms of what is driving institutions to look at crypto, I think they understand the issues of the financial system. I think most people understand how much debt that there is. The US, the largest economy in the world, the government's over 100% of GDP in debt. The private sector is another 120% of GDP in debt. The financial sector is another 200% of GDP in debt. The world is 400% of global GDP in debt. I mean, these are staggering numbers. The world has never had this much debt. They are also aware that that brings fragilities. We see endless banking crises around the world that roll on and on and on because of this very issue. And then they became very aware of monetary printing and the impact that that has as well. So almost every institution that I speak to, whether that's a hedge fund or a pension fund or an asset allocator of some sort or a sovereign wealth fund, understands this. So the question they then ask themselves is, how can we not have an allocation to crypto? So by the time they got to that point, because these are slow moving and they have a lot of work to do internally to get the approvals, what you tend to find is the cycle ends and everyone's like, whoa, they kind of are aware of the volatility. So I don't think it scares them as much, but they just now want the confirmation that the volatility is out of the way and the next phase is coming. So that was the big thing that I saw in this cycle versus the previous cycle. The previous cycle, we saw some participants coming on, people like Fidelity. They started to come into the space. Some of the bigger hedge funds like Brevan Howard had come into the space. Soros, More Capital, these giant hedge funds, they all explored and invested in the space. This time around, the 2021 period, pretty much everybody did the homework. And you'll have seen it at Binance. Everybody's seen it. They've all had a lot of conversations with all of these people. Family offices became much more involved this time around as they understood it. How can they preserve wealth in an environment where the central banks are printing currency? How can they preserve wealth in an environment where you don't know if you could hold onto your assets if a banking system goes under? That kind of issue. So we've definitely seen that. We've seen the rise of, on the trading side, we've seen the rise of more traditional hedge funds investing in this space. So the large asset gathering hedge funds have all traded in the space. They're still not yet comfortable with the volatility. Some of them are, some of them aren't. Others span off whole hedge fund units like Brevan Howard. So Brevan Howard Digital is a giant in the space now. And I think we'll see more of that because the return profile is different and it's harder for the regular investor to get, if not the book is quite small. But we're definitely seeing a lot of interest from that. They pulled back a bit because of the bear market, but that's their job. Their job is to allocate assets, They don't have to be crypto believers all the way through. They need to be gunslingers who look for capital opportunities. But most of those have done the work and will come back into the space. The crypto hedge funds, there's a lot that always launches at the peak of the cycle. And then at the bottom of the cycle, a lot of them don't work, but the better ones survive and thrive. And we see higher and higher quality people coming out of the traditional hedge fund industry and out of the top investment banks like Goldman Sachs come into the space. Then we've got on the banking side of the equation, all of the big banks have large crypto teams, not yet so much for trading, but building blockchain technologies, the securitization of putting assets on chain, but also ready to make prices, to market make, to offer products to clients. They're all doing the work as well. So I see all these. Well, I know it's very difficult for most people because all they see is price go up, price go down. But I see what's going on behind the curtain, and this freight train of everybody moving towards this is happening.
The upcoming 2024 halving event is poised to offer a multitude of potential opportunities for investors across the spectrum, encompassing both retail and institutional participants. Raoul highlights that institutions such as BlackRock are well prepared to capitalize on these prospects. When questioned about how investors have been reshaping their portfolios to align with the cryptocurrency market, Powell explains that this adaptation has been an ongoing process since 2021. Many institutions cautiously ventured into cryptocurrency investments, using the intervening time to acclimate themselves to the market's volatility and assemble proficient teams capable of navigating the tumultuous waters of the crypto industry. In the interview, Powell also delves into the implications of the growing presence of institutional investors like BlackRock and their substantial capital for cryptocurrency asset prices in the upcoming bull markets. Here are additional excerpts from the interview that shed further light on these discussions.
I think they've done a lot of the preparing. They've got kind of approval to allocate. Many of them put their toe in the water in 2021. There was a lot of institutions that got involved, and really they were in the learning stage. And what I've found is a lot of those institutions have now built large teams, looking at what they can do about like even tokenizing their funds as well. We've seen people like Franklin Templeton building out huge teams to do that. Fidelity have built out huge teams. So there's lots of people doing that. The next phase for these guys is, okay, we understand it. How the hell do we implement it? And this is where it gets harder, because they then have to go and say, okay, do we need to open a multi-sig wallet? Do we want to hold it in an exchange? How do we do this? And obviously there's no ETF, which is one of the things they're waiting for, particularly the investment advisors and the smaller pools of capital. They don't have a vehicle that's easy for them to pass their traditional risk management systems because they're not used to self-custody assets. Right? There's not many self-custody assets. Most of them don't self-custody gold, even though they may have gold. They use the ETF as the easier way to proxy because they don't want to self-custody. So they're all figuring out what the way to do this is. Many of them did VC. So we saw record amounts of VC, 65 billion over 2021, 2022. So that was their way of getting started. Now the next phase, I think, is the more liquid markets. So some own Bitcoin directly, for example. Seen that a lot of family offices do, Bitcoin, ETH, and a bunch of others. We're seeing that. I think we'll see the rise of new products, which is stuff like ETFs. I think we'll see a rise of a structured products market. Now there's more of an options market. So we will see these guaranteed products that have been very common in Europe and Asia over a long time. The next phase, I think, that is very interesting is this time around, they now have an asset that has a yield, which is ETH. And so they can have a yielding asset that also has the risk return profile of technology. So it's a very interesting thing for them to do, because if you're a pension fund, you actually need a yield to pay the pension payments. So it becomes very interesting for them to have an asset, unlike gold, because gold doesn't have a yield. It has a yield. Most tech stocks don't have a yield. So I think there's a phase of people now looking into, okay, how can we hold this asset as well into our portfolio? What does yield in crypto mean for us? It's likely to mean a higher ability to own assets in the space. I think this next phase, so the next bull market or the next business cycle, will see a mass onboarding of institutions. I've seen this space before. Usually it's the family offices are first to take risk. And we've all seen that in the space. Many family offices were the first to invest. because they're freer to do what they want with their own capital. As I said, most of the institutions have done work, including the investment banks. And so now they just need price confirmation, and then they'll be in. So I think we'll see a lot of that. Now, that kind of makes sense because the asset class at peak was 3 trillion in 2021. It's almost impossible for retail investors to continue the pace of adoption. It needs the institutional capital as well, which drives out the ongoing adoption curve. So, my view is still by the end of this cycle, the space is probably 10 trillion plus. And that happens because of the institutions coming to the space, offer more products to their clients. So institutions coming into the space tends to mean that BlackRock offers a product to their network of advisors. So it allows more money to come into the space via different mechanisms.
Raoul Pal's projections for an explosive crypto summer in 2024 aligned with the sentiments of several prominent figures within the cryptocurrency space. Recently, the co-founders of crypto analytics firm Glassnode shared their perspective on Twitter, suggesting that Bitcoin might achieve a new all-time high sooner than anticipated by many analysts. According to Jan Happel and Jan Elleman, both key figures behind the analytics firm, their outlook is influenced by the US dollar index, which they anticipate will reach a peak at 106. This, they argue, sets the stage for an ideal Bitcoin environment. In their August 21st post, they expressed that Bitcoin's last consolidation phase coincides with the expected peak of the dollar at the 106 level, creating favorable conditions for Bitcoin. They anticipate Bitcoin aiming for $37,000 before experiencing further upward momentum in the autumn. Additionally, they share a chart in another post projecting that Bitcoin will surpass its previous all-time high, reaching over $144,000 by early 2024. We are interested in hearing your thoughts on Raoul Pal's and Glassnode's predictions for Bitcoin and other cryptocurrencies. Do you agree with the notion that Bitcoin, fueled by significant investments from institutional players, will surpass its current all-time high in 2024? Please share your comments, observations, and forecasts for the leading cryptocurrency in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.